The stock market has surged over the past several weeks. However, a gauge of stock market volatility has held above a key level for the longest span since 2012. I'm talking about the VIX, or as it is also known, the fear factor. Let's take a look. The CBOE Volatility Index, or the VIX, uses S&P 500 options to measure trader expectations for volatility over the coming 30-day period. Since the spike to over 30, it has come down significantly while the market has rebounded. As we have talked about this before, the gauge tends to, but does not always, fall as the market climbs and vice versa. However, according to Frank Capillari, an executive director and senior equity sales trader at brokerage Instinet, the VIX has maintained a level above 15 for the longest stretch since about 2012. A level above 15 may sound like an arbitrary figure, but Capillari said 15 has represented a point of resistance for the fear gauge in the past year or two and now represents the index support level. What is interesting to Capillari is that while the VIX has refused to drop below 15, the three main equity indices have gains of at least 16% since their December lows. Capillari noted that one gauge of the muted moves in the VIX is the VVIX, a measure of swings in the VIX itself, has been muted during the market's broader move higher. You can see the measure of the VVIX in the middle of this chart here. And the lower the VVIX moves means the lower level of the swings that the VIX experiences. Essentially, the VIX has become calm, but at an elevated level. What Capillari believes is that this may add up to the likelihood that the VIX is set to experience a more pronounced pop, which typically correlates with a downdraft for stocks. So now let's go to our charts and take a look. So what we're looking at here is the 6-month daily chart on the CBOE Volatility S&P 500 Index, and of course the symbol is VIX. And as you can see here, the close on Friday was 15.72. And if you go all the way back to this period here, there at that point and above, the VIX has remained above 15 throughout this extended period of time, and that's relatively unusual. So basically, what was happening is that the VIX was coming down here as the market was rising, and it started a bottoming process and attempted a spike at that level there, and maybe even this level here, but failed. And then came down to this point here, and it looks like it's bottoming again. And if you remember, at this point here, this is when the Fed came out with some comments with regard to rate hikes that implied perhaps some easy money. Going back down here into the MACD, you can also see the attempt at a bottoming process in there, the fail, and then the move again here with another attempt. And so we're looking back at this point here, say in November, it made a similar attempt to bottom at that point, failed, came back down, and then was successful there. Now, these are a little bit different in the pattern, but there still are some very good similarities. So I'm watching this very closely because I want to see if the fast line does cross through the slow line and head on up to that point. If it does, then of course the market is going to have a correction. And I've been looking for that correction for some time now, and it hasn't come yet. So hopefully it does, because after it has a correction, and I'm thinking it's going to have a successful test of the recent lows, then that to me is a signal to buy. Moving here into the MACD histogram, you can see that improvement in the VIX has been going on for some time, and it's just about to cross through the zero line there and head up. The price rate of change shows much the same. Relative strength index as well, a very long bottoming process there. Perhaps these two moves there you can say were a little bit different, but I think a good bottoming process there. yet we're heading down, but I'm looking for an attempt to move up below that 50 or midline. The same thing here on the stochastics. The fast line has popped through the slow line and is above the slow line, so I think that there's a good probability that this may continue to head on up. Into the Williams, the same sort of pattern here, a very good bottoming process, and it looks like it may want to head on up toward that 50 or midline. Back up here to the price chart on the VIX. And again, as we see, it does have this bottoming process over 15, and that's the problem. This is a relatively elevated level considering the past where it has been under 15 and into these areas here, somewhere above the 10 level. So that's probably in the 12, 13, 14 range in that channel there. But now we're above there. So if we bottom here, and if it decides to percolate and have a little pop, that could cause a small downdraft in the market. And that's what I'm looking for. So for today, that's ChewDog Charts. Thank you.